If I had to restart my entire day trading journey from zero, the very first thing I would do is focus on the foundation. Not indicators. Not fancy strategies. Not buying courses or copying someone's signals. I would start by understanding how trading actually works because most beginners jump straight into the deep end without learning how to swim. And that's exactly why they struggle. Today I'm going to give you the explanation I wish someone had given me on day one: simple, clear, and absolutely beginner-friendly. What day trading truly is. Day trading is not about predicting the future. It's not about being the smartest person in the room. And it's definitely not about gambling on hype. Day trading is the skill of buying and selling a financial asset within the same day to capture small, repeatable movements in price. Whether you're trading stocks, forex, crypto, or futures, the core idea stays the same. Your job is not to guess the market. Your job is to identify repeatable behavior and act with discipline. The moment you understand this, trading becomes much less stressful. You don't need to study global economics. You don't need to know every news release. You just need to read the language of price and follow your rules. The market is a psychological battlefield. Every candle on your chart is telling you a story. A story about fear, greed, panic, confidence, hesitation, and impatience. When you watch a breakout, you're watching buyers become aggressive. When you see a sell-off, you're watching fear take over. When the market moves sideways, you're watching uncertainty build. Once you realize price is a reflection of people, reading charts becomes 10x easier. You stop seeing lines and candles, you start seeing behavior. And behavior is predictable. The market only does three things ever, no matter what asset you trade. Every chart in the world moves in only three phases. Trend up, higher highs, higher lows; trend down, lower highs, lower lows; sideways range. The market takes a break. That's it. Most beginners lose simply because they use the wrong strategy in the wrong environment. They try to catch breakouts in a range. They try to scalp a trending market. They fight the market instead of flowing with it. If you can identify which phase the market is in, everything becomes easier: entries, exits, stops, confidence, everything. Why beginners keep losing? Beginners don't lose because trading is impossible. They lose because they enter the market with the wrong expectations. Here are the real reasons most new traders fail. 1. They have no plan. They trade out of boredom, excitement, or FOMO. 2. They risk way too much. One bad trade wipes out an entire week. 3. They rely on indicators without understanding them. Indicators lag. Price action leads. 4. They keep changing strategies. No consistency equals no progress. If you can avoid these 4 traps, you're already ahead of 90% of beginners. Trading is a skill, not a jackpot event. Think of trading like learning a language or playing a sport. You don't become fluent or skilled overnight. You improve with reps, practice, and patience. Profitable traders aren't special. They're not lucky. They're consistent. They're disciplined. They follow their system even when they don't feel like it. The day you shift your mindset from, "I hope I win, I'm building a skill," that's the day you start becoming a real trader. What this journey will give you. The goal is not to make money on your first day. The goal is to build a system that can eventually make money every day, day after day, month after month. In this series, you're going to learn how the market moves, how psychology controls everything, what tools actually matter, how to calculate risk, how to read charts properly, and how to build your first strategy the right way. Once you understand the foundation, everything else finally clicks. This is where your real trading journey begins. Let's build it the right way. Now that you understand what day trading truly is, the next step is building your trading environment, your toolkit. Think of this as setting up your workstation before learning the craft. High-quality results always come from a clean, simple, and reliable setup. Most beginners fail not because they lack knowledge, but because their tools are messy, complicated, and distracting. You don't need 20 indicators, 10 websites, or 5 different broker accounts. You just need a clear, organized system that gives you accurate data and fast execution. So in this act, I'll give you the essential tools every beginner needs, nothing extra. Charting platforms, your window into the market. Your charting platform is where you read price action, study patterns, and prepare your trade plan. And for beginners, one platform stands above everything else. TradingView, best for stocks, crypto, and forex. Clean interface, powerful tools, cloud-based, and beginner-friendly. You'll find every indicator, drawing tool, and chart type you'll ever need. Most traders never switch because TradingView grows with you as your skills improve. If you want to trade futures, you can consider NinjaTrader or Thinkorswim, best for futures traders. These platforms offer deeper data, order flow tools, and more advanced analytics. And no matter what you choose, follow one rule. Keep your charts clean. Price, support, resistance levels, and volume are enough. Noise creates confusion. Point 2. Real-time news sources protect yourself from surprises in day trading. News can move the market faster than any strategy. One event can flip the entire trend in seconds. To stay safe and prepared, use Forex Factory Calendar, shows all major economic events with impact ratings. Investing.com news, fast and reliable market headlines. Benzinga or Twitter feeds, great for real-time updates and trader alerts. Remember, news awareness is protection. Never trade blindly into events like CPI, FOMC, or NFP. Scanners, finding setups that match your strategy. A scanner helps you find high-probability opportunities without checking charts one by one. Not required for beginners, but extremely helpful later. Finviz, free and beginner-friendly, perfect for filtering breakouts, volume spikes, or trending stocks. Market Chameleon, great for volatility and unusual activity. Trade Ideas, Benzinga Pro, premium scanners used by professional traders. Use scanners to locate stocks or pairs that fit your criteria, not random hype. Brokers, the engine that executes your trades. A good broker gives you speed, low fees, and reliability. Look for fast execution, low spreads or commissions, regulated platform, clean order panel. Common options include Interactive Brokers, TD Ameritrade, TradeStation, OANDA, and Binance Bybit for crypto. Never deposit money into an unregulated or unknown broker. Additional tools that make you learn faster. Screen Recorder, OBS Loom, review your sessions and correct mistakes. Trading Journal, track your setups, results, and psychology. Bar Replay tool on TradingView, practice strategies without risking real money. If there's one truth every successful trader eventually accepts, it's this: your mindset controls your results more than any chart pattern, indicator, or strategy ever will. Most beginners think trading is a technical game, but the deeper you go, the more you realize it's actually an emotional game. The market doesn't punish people who lack knowledge, and it punishes people who lack discipline. When I look back at my early trading years, the biggest losses I took had nothing to do with bad setups or poor analysis. They came from emotional decisions: fear of missing out, chasing after fast-moving candles, doubling my position to recover a loss, or closing winners early because I was scared to lose the profit. And that's why psychology is the backbone of consistent trading. The first step is accepting that losing is part of the business. Professionals don't aim to win every trade, they aim to execute their plan consistently. A strategy that wins 55% of the time can make you wealthy if you follow your rules. But a beginner with a 90% strategy can still blow up if they can't control their emotions. The second key is removing expectations. When you sit down thinking, I need to make money today, you're already trading from pressure. Pressure leads to forcing trades, ignoring risk, and reacting emotionally. Instead, shift your focus to process over profit. Ask yourself, did I follow my rules? Did I manage risk correctly? Profit naturally follows disciplined behavior. Another crucial part of trading psychology is patience. Most beginners lose money not because they lack skill, but because they can't wait. They enter early, exit late, or jump into setups that aren't part of their plan simply because they want action. Great traders know that the market rewards waiting. One clean setup is better than 10 emotional trades. Finally, you must detach your identity from your results. A losing trade doesn't mean you are a bad trader. A winning trade doesn't mean you're invincible. Your goal is not to feel good, it's to execute consistently. Treat every trade as one event in a long series, not a personal reflection of your worth. Master psychology and the charts become clearer. Master discipline and the profits take care of themselves.